So let me introduce these 15 minutes with that first 5. Number 1, coronavirus is an exogenous shock, not an endogenous structural break. Picture a man walking down the highway and he gets a hit by a 2x4. Didn't see it coming, knocks him over, knocks him out, does some damage. He gets back up on his feet and he looks around and he can't find the 2x4. It comes and it goes. That's what happens with viruses. This is not the first virus to hit us. Contrast that with the same guy walking down the highway having a coronary. He may be able to get up, he may not. It may take surgery, it may not be fixable, we don't know. There is a very huge difference between an exogenous shock and an endogenous structural break. Number 2, we have engineered this recession by turning the economy off. Coronavirus did not cause the recession. Our attempt at avoiding it caused the recession. And so we turned it off. The logical question is, well, can we turn it back on? And of course, we're in the early weeks of playing around with that. Different geographies will come back in different points in time. Politics has gotten in the way. Some things are coming back immediately. Some things will never come back. Other things will take more time and require some help. Number 3, the most important variable to understand and figure out where the economy and the markets are going are the coronavirus curves. Not monetary policy or fiscal policy and everything else. It's give me the curves state by state. Are the cases going up, going down? How many people are going in the hospital? How many are coming out? How many are losing their lives? And of course, of late, we're getting, I'll be a pessimist, less bad news on this front. Number 4, monetary and fiscal policy represent the most massive policy aid and response anyone on this video has ever witnessed. Speed and magnitude. Despite that, those things will not fix coronavirus, but they will aid the economy as it comes back, and we're already seeing evidence of that. And finally, number 5, the stock market is a discounting mechanism. It always looks to the future. The stock market went down 35% in a little over a month, the fastest decline ever recorded. And it happened almost before we got any bad news about the economy. It basically said, guys, bad news is coming. I'm going to warn you by taking a big hit. So it is no mystery why the stock market is going up when the news isn't so good. The stock market is saying there's a recovery out there. I'll try to square the circle a little bit more, but they're my 5 tenets, if you will, that have governed everything I'm trying to say. So with that long introduction, let me comment on 10 different items. Number 1, the markets. The stock market, and again, I should have said up front, I'm a U.S. large cap portfolio manager, so 90% of what I'm going to say is related to the U.S. That's where I pretend to have some knowledge. Outside the U.S., I can speculate, but my crystal ball is no wiser than anybody else's. It's 3.5 months since the U.S. stock market peaked on February 19th. The first 30 days, we went straight down. The next 30 days, we went straight up. The next 30 days, we went sideways. And the last 15 or so, the last half month, we've been going back up. What's causing the market to go up? 1, the improved outlook for the economy. 2, the stimulus I referenced. 3, a belief, and I agree with it, that the recession will be short. And 4, preliminary excitement about reopening the economy. Number 2, policy. I could take an hour and describe monetary and fiscal policy and what's happened since this all started, but let me not review history and just tell you where we are. Monetary policy. The Fed in the United States, the central bank in the United States, gets very high marks, as does Chairman Powell. both in terms of the speed at which he tackled the situation and the magnitude, and I might say thirdly, the way he was able to fine tune it and aim at various parts of the market that needed help. Chair Powell has said the correct monetary response, and I fully agree with this, to the shock we've had is not negative interest rates. I would argue that's been a failure in Europe and Japan. We will not do that in the US. Instead, the proper recipe is to purchase corporate bonds and other forms of quantitative easing in order, first, to stabilize markets, and second, to narrow some spreads. Fiscal policy. We've had several bills totaling not quite $3 trillion. We will get, in my judgment, one more big one. Nancy Pelosi, about 3 months ago, put a trial balloon out there, a $3 trillion bill, dead on arrival. But the president, watching the calendar, seeing November is not that far away, says, you know what, I need a bill. We're going to get another bill in my judgment. I'll tell you what, the noise around this in Washington is huge. They can't agree, and I think it was earlier thought it would be in June. It may not be to July, but we will get another, in my judgment, $1+ trillion bill. It'll have another round of tax refunds, some state and local government aid, some extension of the PPP program, and some other variety of measures. Point 3, the economy. First quarter GDP in the US, which is the broadest measure, gross domestic product for those unfamiliar, was down 5%. That is the worst quarter any of us alive have ever seen. But that's only a warm-up back to the second quarter, which will be down somewhere in the order of 40%. And as you probably know, in the US and many other countries, lots of job losses. In the US, in 6 weeks, we lost more jobs than we gained in the entire longest expansion in US history. And that's the one that ended just a couple of months ago. And that expansion was prolific for job creation in that it took the unemployment rate in the US down to 3.5%, the lowest in 50 years. Unemployment in the United States is only reported once a month, the first Friday of every month. So we're a couple days away from getting another report. The last one was 14.7%. That was the April number. The May number is probably going to be closer to 20, call it 18 to 20, somewhere in that zone. And that should be at or close to the peak. The economic data is improving because states are opening up. There is some pent-up demand, and there's massive stimulus, as I mentioned before. Now, don't get carried away. We're kind of moving, if you will, from the 14th sub-basement to the 10th sub-basement. For example, here's what Lyft, the ride company, said today. Rides for Lyft in the month of May were up 26% from April. That sounds gargantuan. But to put in perspective, they're still down 70% year over year. So we're going to get a lot of numbers that look really good, but all they're doing is coming off a very low base. It will take a long time, several years, in my judgment, for the economy to return to where it was. Having said that, the COVID-19 recession will go in the history books as the deepest and shortest recession in US history. Many of you that are close to these things have heard, is it a U, a V, a W, an L? I'm using a check mark. Let me draw it your way, check mark. The first part of the check mark is steep and short. That's the recession. The long part at less of a steep slope is the recovery. My guess is it will take the balance of this calendar year to get back as much as 80% of what we lost in 6 weeks. The remaining 20% either will never come back or will take another year or so. Number 4, earnings. Like GDP, first quarter earnings is a warm-up act for the second quarter. Earnings in the first quarter were down 14%. Second quarter earnings are going to be down more like 50%. I don't think the stock market cares about earnings in the second quarter. It's wanting to know how good will the third quarter be, and more importantly, what's 21 going to look like? I'm guessing, and that's all these things are, the earnings for the full year in the US will be down 25% and up 20 to 25% next year. So it won't be until 2022 that we have a chance at getting back to peak earnings. Number 5, a couple comments on coronavirus itself. In mid-April, if you looked at all the states in the United States of the 50 that had declining daily coronavirus count data and added up their GDP, it was about 15% of the US economy. If you do that exercise today, it's nearly 90%. That's why you see things open up. Why did we lock down? The lockdown was not to eradicate coronavirus. It was to take pressure off the healthcare system and buy time for testing and therapeutics. Therefore, we will not lock down again. We will learn to live with coronavirus just like we learn to live with all kinds of other viruses. A few other factoids. The percentage of the US population that lives in nursing homes is 0.4, less than 0.5%. But the number of coronavirus deaths that occurred, 45% of them occurred in nursing homes. Think about that. The average age of a coronavirus casualty, 75.8. And over 80% of the deaths occurred in people over the age of 65. As somebody said, if you isolate and lock down the elderly and the people with prior conditions, that's quarantine. If you lock down the society, that's tyranny. That's part of why we're getting all the eruptions we are. Point 6, 2 items that have changed very significantly. 1, the US and the world's view of China. Time doesn't permit me to go into a lot of detail. Maybe we'll get there in the Q&A, but let me make it short. China has moved from competitor status to adversary status. And this has implications for years to come. The other big change in my judgment is the probability that President Trump gets reelected. The first of the year, that probability was decent. Now it's less than 50% in my judgment. And here's the analysis behind it. 16 US presidents have run for a second term. The 10 that ran without a recession, all 10 out of 10 were reelected. No exceptions. Of the 6 that ran that had a recession either in the election year or the one before, only 1 was reelected. 5 went down to defeat. If you add that to the fact that the 6 battleground states where the election is going to be decided, all 6 of them have an unemployment rate that is in the top quartile of unemployment in the US. Number 7, the question I get asked a lot these days is, are we going to have inflation? Who's going to pay for all this? That is an appropriate 2021 question, in my judgment, not a 2020 question. Remember, recessions are deflationary. The inflation rate is and will continue to go down for a period. But yes, somebody's got to pay for all this. There are 3 ways, to be a professor for a minute, that this can be taken care of. Number 1, we can allow the central bank's balance sheet to remain big and the deficits to remain big. That's essentially what Japan has decided to do. And the impact is very slow growth. That's one option, not very pleasant one. The second possibility is we do like we did after the Great Depression nearly a century ago and raise taxes significantly. Not a very good outcome either. And the third is we monetize some of this by turning on the printing press. Not very pleasant either, because that causes inflation. So you see, we have three broad choices, none of them pleasant. In 2021, the debate will start on these issues, and my guess is, like most things, it'll be more about politics to decide the answer, not economics. And we'll do some combination of all three. Number 8, inside the stock market. Apologies for those who are not close to it, but I'll make it brief. I want to make a quick comment about common factors, then one about sectors. Those close to the stock market know for the years up to coronavirus and in the decline and the early stages of the recovery, you wanted to be in growth stocks, defensive stocks, and big cap stocks. In the last month or so, including today, we've heard a lot more from value stocks, cyclical stocks, and small cap stocks. My judgment, it is now a both and, not an either or. So don't run out and sell all your growth stocks to buy value stocks, but make sure you've got some in the portfolio. Sectors. There are 11 sectors in the stock market. After quantitative easing 1, 2, and 3, parenthesis, we're in QE 4, there are 2 sectors that outperformed all 3 times, technology and healthcare. There are 2 sectors that underperformed all 3 times, utilities and REITs. Guess what? And the 4th time, the same thing's happening. Patterns do repeat themselves. Number 9, back to the stock market itself. In my judgment, we're in an epic battle. I know that sounds a bit grandiose, but in one corner of the boxing ring, you've got $8 trillion of stimulus, and the other corner, you've got a collapsing economy and earnings. The second corner won the first round. The second quarter, the $8 trillion won the second round. The question is, where are we going from here? I don't think it's straight up. My view, the stock market's a bit ahead of itself. If I had money on the sidelines aimed for the stock market, I'd be cautious about how quickly I put it in. Finally, number 10, will anything change? Well, I mentioned China and the election, but leave those 2 things aside. Some of you will remember after 9/11, articles, papers, books were written about how so many things would change. And you know, within a couple of years, almost everything reverted back to normal. The only thing that, in my view, has changed of significance is if you have to make a plane, you can't go to the airport 30 minutes before your plane. That's changed. I think we're going to repeat here. All kinds of articles, papers, experts saying the world's changed. We'll see. Some things have changed for the next 6, 18, 24 months, but I'm not convinced forever. For example, households, higher savings rates, fewer vacations in the air, more staycations. Corporations, less business travel, more work from home, fewer stock buybacks. The government, more global travel restrictions, increased health safety regulations, sadly, higher supply of government bonds. Most of those things in 24 months from now will revert back to normal. We're creatures of habit. Let me end this first 15 minutes, so I've gone a few minutes past, apologies, Tommy, with 10 conclusions. Number 1, the number of COVID-19 cases and fatalities is not over, but is falling. Secondary recurrences are a clear possibility. 2, we will continue to witness absolutely horrific economic data. 3, reminder, painful exogenous shock, not a systemic structural break like 2008 or, God forbid, 1929. 4, the key to the economy and the markets are the coronavirus curves. Don't forget it. 5, having said that, the economy is being helped by the largest blast of aid and stimulus any of us have ever seen. 6, stocks have seen their bear market low. It occurred on February 19th at 2297 on the S&P 500. We will not see that level again in this episode, in my judgment. but we are in a volatile whipsaw pattern period. 7, it is likely that stock prices and interest rates will be higher a year from now than they are today. 8, no one can pick tops and bottoms. Therefore, if you need to get in and out of things, use dollar cost averaging to do so. 9, reminder, tech and healthcare over utilities and REITs. And finally, number 10, here are the 5 data points I'm watching like a hawk to get a feel for if everything I've said makes any sense or if I've got to get a blank sheet of paper out. 1, the coronavirus data. To repeat, less bad news. 2, credit spreads. They're narrowing, taking heart in the fact that, in particular, energy credit spreads have narrowed in the last couple of weeks. We're not out of the woods, but we've improved. 3, the yield curve. I'm encouraged that the 10-year Treasury closed today at 75 basis points. That's the highest it's been. We've been between 60 and 70. I want to see 80, 90, 100. Copper prices. Number 4, copper is the commodity that has the highest correlation with global economic activity. It's off the bottom, but it's got a ways to go. And 5, weekly jobless claims, which give a handle on the contemporaneous hit for the economy. So, I hope that's been useful. I know it was a lot of data. Some of you picked up on all of it. Some are just bits and pieces, and that's okay. I look forward to Q&A on that. That's the temporal set of comments. God put us on this planet with a responsibility to care for the things that he's given us, and among that is our money. And I hope this helped in some way, shape, or form. But let me shift gears and try to put it in a context. I want to start by reading 2 verses from the book of 1 Chronicles. Most of you know these verses. When I shut up the heavens so there is no rain, or command locusts to devour the land, or send a plague to my people, my words now, or send a coronavirus to the earth. Verse 14, if my people who are called by my name will 1, humble themselves, 2, pray, 3, seek my face, 4, turn from their wicked ways, then I will hear from heaven, I will forgive their sin and will heal their land. I hear people saying, I wonder what God's up to. It's clear, he told us. I'm God, I'm in my heavens, I'm running the universe, and will you people pay attention to me by humbling yourselves, praying, seeking my face, and turn from your wicked ways? And then I'll heal your land. It's not that hard. Here's a quote from a modern writer in the wake of those 2 verses that have gotten my attention. I hope they get yours. Michelle Perez Pope said, in 3 short months, just like he did with the plagues of Egypt, God has taken away everything we worship. God said, you want to worship athletes? I will shut down the stadiums. You want to worship musicians, even Christian ones? I will shut down the concert halls. You want to worship actors? I'll shut down the theaters. You want to worship money? I will shut down the economy and collapse the stock market. Oh, you don't want to go to church and worship me? I'll make it where you can't go to church. Then she goes on to say, maybe we don't need a vaccine. Maybe what we need in this time of isolation from the distractions of the world is to have a personal revival where we focus on the only thing that really matters, Jesus Christ. I don't know about you, that got me between the eyes, and I contemplate that every day. So let me make, in light of that, 10 spiritual reminders. I hope these are helpful to you. 1, remember, God is sovereign. In the early days of this, a lot of people would say, the world's out of control. What's going on? I said, you may be out of control. I may be out of control. But the God of the universe is not out of control. He knew before the foundation of the world that in 2020, planet Earth was going to see coronavirus. Relax. that God has placed in front of you. Simplify your life. Number 5, make a wise plan and rely on God. You know the proverb. The heart of a man plans his ways, but the Lord establishes his steps. One of the things I want to ask the Lord when I get to heaven is, what did you have in mind when you had that balancing act there? On the one hand, we're to rely on you. On the other hand, you gave us brains and hands to do things. How do we do? Number 6, the events that we're going through expose our idols. It is time for us all, I'm looking in the mirror as I say that, to deal with them. As Calvin said, the heart is an idol factory. We just create them over and over and over. Who are we truly worshiping? Number 7, give generously. And that doesn't just mean money. It means time. It means intellect. It means relationship. There are lots of things we can give, and there are a lot of people and organizations in need. Go for it. And therefore, number 8, turn inward focus to outward focus. I counsel people all the time. This is a wonderful time to look out, not in. You look inside, boy, you can get bored with your 4 walls really fast. Number 9, I'm stealing from the Apostle Paul. In all things, give thanks and be content. Give thanks vertically and give thanks horizontally. Number 10, live out your faith. I ask the question of all of us, myself included, do our actions back up our beliefs and our statements? The world is watching. The world's always watching, but in times like this, the world is watching those of us who name the name of Christ more carefully. Let me reflect personally on 3 things that have struck me in the 3 months during coronavirus. First of all, I would argue this is a phenomenal time for the gospel of Jesus Christ, and many of you will agree. People, whether they're believers or non-believers, are open for conversation. People are talking about, what's this about? Why did this happen? Is there a God? Why did he cause this? Where am I? Where am I going? I'm scared. They're cosmic kinds of questions that point immediately to a discussion about God. I want to share 3 brief personal reflections. Number 1, Sunday mornings. Some of you know I direct the choir and do music in my church. So Sunday mornings, I'm sometimes a little preoccupied. We pre-record now. So Sunday mornings, I'm totally, quote, free. I have a routine. I'm a little bit of fanatic and a little, I listen to 4 worship services every Sunday morning. And am I ever blessed? I am so grateful for coronavirus because on Sunday mornings, I'm so much closer to the Lord than I've been in a long time. In tune. Thank you, Lord, for what you have enabled me to see about yourself on Sunday mornings. Number 2, I've been struck by the brevity of life. How can we not see that in this environment? And the third thing that the Lord has brought to Leslie and my attention is to give to the poor. On the first weekend after coronavirus struck, we said, we're going to get letters and calls from every organization on the planet. They're all going to need some money. Let's decide now what we're going to do. And we said we're going to give money to the poor. So we took, for us, a generous amount of money, and we split it 7 different ways between different organizations and causes that would attempt to reach the poor and the needy in spirit and physically. Next, I want to commend your attention. I could talk about a lot of things, but highest on my list, if you haven't read it yet, is an article written by Praxis. The primary author was Andy Crouch, Leading Beyond the Blizzard. Great, great article about where we are and where we're going. Tommy, let me conclude with some to-dos. 5 spiritual ones and 5 practical ones. I hope there are 1 or 2 here helpful for everybody. They've all been helpful to me. Number 1, spiritual. Acknowledge God. Do you believe he's on the throne? Do you believe he's sovereign? Do you believe he is in control? Do you believe he owns it all? Do you believe we are just passing through? This is not our home. We're on this planet for this long, and we're in eternity for this long. Why do we spend so much time on this and not nearly enough time on this? By the way, if you haven't read Randy Alcorn's book on heaven, go for it. Number 2, be calm, be still, and pray. Panicking won't help anyone or anything. Number 3, I'm going to repeat myself. Express gratitude to God and to others for big and small things. This is a great time. Most of us have different amounts of marginal time these days. What are we doing with it? Number 4, meditate on the Psalms. As you know, if you're a student of the Bible, the Psalms are filled with highs and lows. David and others, massive periods of praise of God and periods on the opposite, sometimes in the same psalm, of lament. 5 Psalms I would commend your attention. They've been helpful to me in this period. 31, 46, 69, 77, and 91. If you're taking notes, I'll repeat that. Psalm 31, 46, 69, 77, and 91. The 5th spiritual to do, express hope. Believe hope. Lean into hope, both for yourselves and for others. I don't mean a false sense of hope, don't get me wrong. I mean a hope that there's a God in heaven and there's a beautiful and glorious future for everybody who believes in his name. We don't know what's going to happen with coronavirus. In some ways, I say to myself, who cares? I know where I'm going to spend eternity. I know what's going to happen when this heart stops beating. 5 practical suggestions. 1, be productive. How many extra books have you read in the last 3 months? Some of you need to write a book. Read one, write one, read several. This time is a blessing from the God of heaven for many people who have excess time on their hands. What do we do? How are we going to count for the time God's given us? 2, turn the TV off. As Christians, we have an obligation to be informed, men of Issachar. But don't become mesmerized. I remember the first Monday night when this all happened, I turned the tube on, and after 2 hours, I said to my wife, would you make me turn this bloody thing off? I've heard the same thing 4 times. Every 30 minutes, they repeat. And if I listen, I'm going to hear it for a 5th time. Turn the TV off. Number 3, reach out to others. Whether it's emails or phone calls, this is a great time to go through, whatever you call it, your email library, your Rolodex, whatever you call it. And, oh, I haven't talked to Tommy for X months. Sally, I wonder how Sally's doing. Just send people a note of encouragement or pick up the phone and call them. They'll be blessed, and you know what? You will be too. Reach out. 4, and connected. Serve others. Lots of ways to do that. My wife's into taking meals to some of the elderly who are just stuck. Perhaps you have a benevolence fund at your church, a community foundation. There's Salvation Army meals all over the place, and there are lots of places that can use your help. Number 5, practical suggestion, take a break. I don't know about you, I've taken more walks, sometimes short, sometimes longer, sometimes just me, sometimes the telephone, sometimes I'll listen to a podcast or something while I'm walking. It'll clean your mind, it'll refresh your soul. So Tommy, I could talk all night. Perhaps somebody would say you already have. Shut up already. Let me stop there and see if there's some questions.
Yep, there are a whole bunch of questions coming in, Bob. Hey, let me ask you one quick question. In light of everything that is happening in the U.S., with a lot of looting, vandalism, everything like that, how has the economy been affected in the last couple of days?
Not a whole bunch. I mean, some of the retailers have struggled, and their stocks have reflected to some degree. But the stock market has basically, quote, turned the other cheek and said, we're not going to worry about this. This too shall pass. I think it's a little bit cavalier, no question about it. Look, I think what investors generally, or the stock market is saying, if it could speak, is what do you expect? You've had the incident with the murder of a black man, and this is not the first. You have a bunch of people who have been cooped up and throttled back, many of them not with the nice four walls that I have that I'm looking at here. And you know what? They're anxious, and I'm not excusing the violence or the destruction in any way, shape, or form, but that things are erupting is no surprise at all given those circumstances. But to answer your question specifically, the economy's still opening up, and you're still getting leaps and bounds upward from a very low base in most economic statistics.
Let me ask you two questions, one on the US base and one on global. How do you think about the debt that has been incurred in the US recently with the stimulus plan, the PPP, economics, all of that stuff? Eventually, the government will have to pay. How do you see that being realized? Is it increase in taxes, or where do you see it being replenished?
First of all, the government will never repay that debt, period, full stop. It will never be repaid. It'll just be recycled. As I mentioned in one of my points, there are three ways to deal with this situation. To repeat, leave the numbers as they are and accept slower growth that Japan has. Two, significantly raise taxes. And three, monetize it by turning on the printing press. And we will do some of all of those things. But that debt will not be repaid. There's no intention of it. We've never repaid our debt here in the US. Let me say a couple of more things. We're obviously borrowing from the future. Therefore, somebody is being encumbered. It could be us. It's more likely our kids and our grandkids. I would also argue that I am not against deficit spending. What I am for is, in the good times, surplus. So that when you get into trouble like we are, you can do deficit spending. The problem is we have the longest expansion in United States history, and we were still running big deficits. That's when you need to be running a surplus so you can turn around and run the deficit in the hard times. But that's a criticism with playing Monday morning quarterback. So the debt will never pay it back, but there are lots of ways we will deal with it, and we'll answer that question in 21.
Globally, this debt will be crushing for many different countries. The US and other developed countries will probably get out of it after a couple of years, but the developing countries and the global poverty gains from the past decade probably will not be replenished. Any thoughts, any insight on that? Any comments?
First of all, agreement. What I didn't say in answer to your earlier question that somewhat distinguishes the US from the rest of the world is the blessing Americans have as the reserve currency of the world. It's something the United States takes for granted. It is a massive blessing, and we do nothing to earn it, which enables the US to get away with a whole lot more than many other countries. A lot of countries, like the ones you mentioned, are going to be stuck with these higher deficits, and will have to pay some of that, which will put a dampener on the growth rate. The growth rate of the globe as a result of coronavirus and the shutdown will be lower after this initial boost of recovery for some time to come, sadly.
Got it. As you are monitoring the situation between China and the US, as well as the Chinese situation in Hong Kong, what are the economic implications of what you're going to see?
Not good. Like in anything, you want the number one and number two powers, the number one and number two bullies, whatever the word is. You want to see them get along. That makes everybody feel better and things going well. But any attempt at trying to cooperate at dealing with, as we did last year with the trade situation as a competitor, is now adversary status, and that is not good for the world. Look, it's no mystery. China wants to be number one in lots of things: technology, economy, military. And the US doesn't want them to be that. They want to remain number one, and you get this, therefore, natural tension. We are in a cold war with China, which will affect the global economy for years, if not decades to come. My hope and my prayer is it remains a cold war and never becomes a hot war. But, the sharpening of the sabers is taking place. China is spending increasing amounts of money on their military. And the US until recently has done the same. Not healthy.
Got it. Here's a question from Singapore. We have 40 million people unemployed in the US, and against a backdrop of rising stock market sits uncomfortably in light of social and economic justice. At this moment, here's what they write: I cannot see how we can change our wicked ways. In what ways can Christian marketplace leaders act? How should Christians rise up to overcome the fear and turn back the hatred of what's happening in their fear-mongering ways in regards to the economy?
My first comment is to agree. We need to remember that in the book of Genesis, man stumbled and fell. We are in a sinful, wicked world. The end is not good. We need to rely on the Lord when he comes back to right all that's wrong. We're not going to do that. Only God will when he returns. In the meantime, that doesn't mean we just sit back and take it. The obligation for all of us is to, can I go to 1 Chronicles? Humble ourselves, pray, seek his face, and turn from our wicked ways. We need to do that ourselves. May there be a revival, and may it start within my own heart. That's the prayer we all need to have. That's not going to necessarily solve the problem, but that can slow the rate of descent. And we know the world's had revivals before. Wouldn't it be awesome if 100 years from now, should the Lord tarry, that the history book said, and the world had a coronavirus, and it led to an amazing revival? That's the opportunity we have to live our lives in a way and to speak the words that cause other people to say, I want this Jesus you're talking about.
Yeah. Bob, here's another question from Singapore. The coronavirus, COVID-19, has amplified the gap between the haves and the have-nots. You've talked about this before. The wealthy who have the privilege to stay and work at home versus many who have lost their jobs or who have continued to work in low-wage jobs that are considered essential services. And here's the question: how can we as Christians in the marketplace who are successful and doing well help to put in place sustained changes that better distribute the wealth to the poor and less privileged in our society long term?
So my view is, as a little idealistic, that is the church's responsibility, not the government's. If we depend on the government to redistribute wealth, which they will do gladly, it won't work. It'll be an absolute mess. So, I come back to, as one example, and I'm not saying this out of any pride. We gave a bunch of money to the Salvation Army in New York City. We went to a rescue mission in Philadelphia and gave a bunch of money there and stood around and helped tell people about Jesus. We went to our local hospital to help the healthcare workers. The benevolence fund in our own church. There are lots of things that anybody who's of means can do materially to help the other side. Doesn't mean we're all going to solve it. I think of Mother Teresa when it's so overwhelming. What did Mother Teresa say? Help the person in front of you. And when you finish with them, go to the next person. Each one of us has to find out what our world makes possible for us to tackle to help solve this problem, to bring somebody out of not just material, but also spiritual poverty. I know it sounds like I'm preaching a sermon, but that's exactly what God set up the church to do, to reach people for his name's sake and bring them out of the miry clay, as the psalm says.
Yeah, actually, this goes with a follow-up question, Bob. Someone mentioned is, what are your tips? I mean, right now there's so many needs. Ministries are emailing us, they're calling us all the time. You mentioned your church, the Benevolence Fund, the Salvation Army. How do you determine, any tips on how you determine what to give to and who to give to, or is it a personal choice?
Yeah, it's boy, that's a tough one. That's why I remember sitting down with my wife. I said they're all going to come at us, every one of them, with legitimate needs. Every one of them is a
Agreed.
legitimate need. They're great ministries. We're going to have to make a decision. So let's do it up front before we have 100 letters in front of us and 50 unreturned phone calls and all kinds of emails, and figure out where is God putting a burden on our heart to reach people. So I say to whoever asks the question, go to the quiet of your closet, as Matthew says, pray about it and figure out, what your role is. You're not most likely, unless you're, a megazillionaire, you're probably not going to be able to help all those needs. You got to pick and choose.
Understood. Here's a unique question from Indonesia, Bob. And they said, from an Indonesian point of view, we believe that God is in control. Watching the US government in action, in your personal opinions, do you feel like the government is constantly responding to different panics economically or even different decisions they have to make? What is your opinion of what's going on in the US?
Well, first of all, hi, Indonesia. I have so many friends there. I hope this is one of my friends from the times I've been able to go with there, Tommy, to see those wonderful people. Look, I think the government gets, as usual, mixed marks. I gave high praise to the central bank. I think they've done a good job. I think that Congress and the president and kind of the Washington machinery, what a mess. One of my prayers when this came is to say, the divide that's so severe politically in the US, Lord, would you use coronavirus to create some unity, to create some commonality? And instead, it's just been the opposite. So, like the questions hinting at, I'm frustrated, as it sounds like the questioner is too, that this is only dividing us more, not bringing us together. It's a sad, sad situation. We need some strong leadership, and I'm condemning both sides of the aisle when I say that.
Got it. One person writes, I'm not sure how familiar you are. Can you give your thoughts on vaccine therapeutics and what are your expectations?
Yeah. I spend a lot of time with epidemiologists, and I have no expertise in that area at all, but I've come up a lot of curves. And the ones I pay most attention to are more optimistic than the consensus. I think we will have prophylactics, therapeutics, vaccines in that order over the next months. It is not out of the question that we will have some sort of vaccine for coronavirus in a limited way before the end of the year. I think it's more likely in the first half of next year, but not out of the question. Here's one thing, this has not gotten enough attention. The scientists, commercial and government, are working together in a way like they never have before to try to solve this problem. Very different from the condemnation I just made of Congress. These guys are really working together. They don't care who gets the credit. They just want to solve the problem. So I think we will have some better news on the medical front before the consensus thinks.
Got it. I know you're constantly looking at the US markets. What other markets are you looking at? Are you looking at Asia markets, markets in Africa, Latin America? Which ones do you look at? How does that monitor what you're constantly doing every day?
Yeah, so I only invest in US securities, so that's where I spend the vast majority of my time. I spend time on economies outside the US, less so the markets. And we all know that the US stock market going into coronavirus was outperforming, went down in the bear market less than the collection of non-US markets, and it's had a bigger recovery. So it's paid to have your money in the US. That won't last forever. I think as the US and the globe gets back on its feet, we will get some better growth outside the US. We will get some faster recovery in some non-US markets, and that will cause some dollar weakness, which we're already beginning to see. Remember, we saw the dollar start to roll over in the fourth quarter of last year into early this year. Then coronavirus took the dollar straight back up because it's a safe haven, and of late it's beginning to erode again. That says good things about non-US economies and markets. So yes, I look at MSCI ex-US in a significant way, and of course the big markets of Europe and the emerging markets like China. I look at Japan, et cetera.
Speaking of the dollar, how much longer will the U.S. dollar be safe as the global reserve currency?
I think as far as the eye can see. As I said a few minutes ago, the U.S. is not doing a whole lot to deserve, to earn, to retain reserve currency status, but there really isn't anybody else who can take the mantle. I mean, the only other currencies that are big enough and broad enough are the euro and the yen. And the euro, well, the euro is a failed experiment. The currency there is not working. Japan, with its secular decline and population decline, it's not going to be the yen, and there's no other currency that's big enough or broad enough. So by default, the U.S. crosses the finish line as the reserve currency of the world.
Got it. Actually, this goes back in reference to the dollar, especially on the market. It says China's central bank is now working on their state-backed digital currency. This has already been piloted in 4 major cities in China. When this is used for trade settlements increasingly, the U.S. will lose one of the most powerful aspects of the USD dollar, the ability to freeze and seize USD assets anywhere in the world. Any comment, any thoughts on that one, Bob?
Yeah, I mean, I'm not an expert on that subject, but I have talked to people who are, and I would say the conclusion of the questioner is not agreed by everybody. That the U.S. will still have the ability to freeze some of those other things. Time will tell. I guess it will get tested.
Yeah. Hey, Bob, for amateurs, lay people who do not watch the markets all the time, you could read blogs, you could read the Wall Street Times. Where can we find trusted sources that we can all consume that are considered true? Where would you recommend for just a regular Joe Schmo who just doesn't know very much about the markets?
Yeah, it's reminded my son Bobby, who you referenced earlier, a couple of years ago, said, "Dad, I want to watch the news to get informed. What can I watch to get sort of the straight and narrow?" And I thought about it and said, in the U.S., sadly, there's nothing left. You can watch Fox for 15 minutes and CNN for 15 minutes, average the two, and you might be closer to the truth. So my purpose in bringing that up is there aren't a whole lot of places. I guess I would say The Economist magazine is one place that is pretty much down the center. It's a voluminous, packed magazine that comes out every week and comments on all kinds of subjects, economic, political, and otherwise, all around the world. So I guess I'm backing myself in the corner and say, if you're going to read one thing, The Economist magazine.
Got it. Is there a scenario where gold becomes more sought after than the U.S. dollar as a safe haven?
Well, of late, the gold has outperformed the U.S. dollar because it's gone up in dollar terms. I think that is likely to continue. In periods of uncertainty, of fear, the gold usually does well, and it has, and I don't think that's necessarily over. My view is if you are a big and sophisticated investor and you want to have a piece of your portfolio in gold, that's absolutely fine to do at this point in the economic cycle.
Back to China again. Are you anticipating a Cold War trade war between China and the U.S., which will lead to reducing global free trade?
Already has.
Okay.
That really started, in my view, about 18 months ago. I mean, as I was growing up in this business, it was almost always the case that trade, imports and exports, were the fastest growing parts of most economy because trade, globalization was a force that powered the global economy higher. The world began to elect and appoint more nationalists, including the President of the United States, over the last 5-ish years. And nationalists tend to be more in-country focused, less interested in things global. And as a result, the questioner's comment is taking place, and you saw it accelerate with the trade issues of last year in the U.S.-China trade negotiations, and coronavirus has only accelerated it further. For example, in the U.S., the government will mandate some supply lines coming back to the US for strategically important items. Some technology, some healthcare, and other countries are doing the same thing. So the Cold War with China is in force and already doing a dampener of globalization and global trade.
Bob, if you don't mind, I still have a bunch of questions, but I'm going to give you 3 more questions since it's 10 p.m. over on your end. Is one person asked, where do you see India as a global economic force?
Big time positive. Not that India doesn't have its issues, but I think in the US, we will talk 10 years from now about India the way we talk about China today. That's both a function of China struggling and India coming on the scene. China has massive problems, including the fact that the one birth policy, the leading edge of that, is now moving into the early days of the labor force. So China's labor growth force rate is going to slow significantly, which is a major determinant of the growth of an economy. India, on the other hand, has got a lot of things going for it. Yeah, it's got to open up its banking system a bit more, become a little more global in that sense. But education, resources, certainly the population. So I think India is on the come big time. And the emerging world, the emerging economies of the world, which both serve China and India today, I think will lean more toward India. I hope India, from a political standpoint, continues to open up its economy. That would be good for them and for the globe.
You may have commented is for some people who are just coming on or missed this part. Talk a little bit about the economy and your outlook at the economy for the next 6 months from now until the end of the year.
Yeah, straight up, but from a very low base. I shouldn't say straight up. It's going to be bumpy opening. But I come back to that lift comment I made. There are many like it. We are going to see statistics. I didn't say this in my prepared comments. I perhaps should have. The month of May, globally, and certainly in the United States, will go in the history books as the bottom of the recession. June will be better than May. July will be better than June. The problem is we are starting at a level way below where we were. So we're going to see some gargantuan improvement, but the old standard, the high of the economy in the first quarter is way up here. So for the rest of the year, upward.
Got it. Bob, can I squeeze in 2 more questions? I'm getting a whole bunch of questions here. All right, let's do some of these quickly. Can you talk about some thoughts about the recovery? So many areas are facing headwinds: oil, hospitality, airlines, retail. The markets do not indicate any concerns. Is the market recovery stimulus driven and short term?
So yeah, part of it is short term. There's no question. I think there's a lot of momentum. We call it TINA. There is no alternative. FOMO, fear of missing out. That's a lot of what's driving the market here. The questioner mentioned some of the weakest parts of the economy, but left out the 85% of the economy that is booming off a very low base. The areas that mentioned will continue to be in difficulty, but there are other areas that are coming back very, very significantly. Look at the purchasing manager indexes, the PMIs recently, off very low bases, to repeat myself probably the 3rd or 4th time, they're up significantly. So the economy overall is doing well, but there's some areas that are troubled. Back to what I said, I think it will take the balance of the year to get back roughly 80% of what we lost, implying we will not be back to where we were. Some things, including the list just mentioned there, aren't going to come back anytime soon.
Got it. Hey, last question for tonight. If for those, and someone mentioned, I'm a young marketplace leader. If you have one word advice, whether it's people who are just graduating, trying to look for a job in today's economy, or they're trying to figure out if they will have a job, what is one word of advice for young leaders trying to figure out their work, vocation, and faith during this time right now?
One simple word, huh? So I'm gonna have to answer that with a couple of different things. One, just find a job. I find a lot of people, I want this job. Well, in the best of times, you can't necessarily find that job. We're in a very difficult period, so take something. It's a lot easier to move from one place to another or move up the chain from a place than twiddling your thumbs looking for a job. So what I'm trying to say is don't be too picky. Constantly, I say to people, lean, what is God's calling on your life when it comes to vocation? It is some combination of what you discover when you read his word, when your heart is in tune with his, therefore you're praying, when you practically think about what you're good at and what you like doing, and the advice of other people. When you line those things up, it may not be on day one, but it takes time. God will work.
Got it. Bob, thank you. It's 10 o'clock. You got to go home to Leslie. You and I actually are back together again. If you guys are on Facebook Live, Bob and I are, Bob is actually going to be interviewing Keith Getty of the Gettys tomorrow afternoon. Bob, for those who are part of the Resource Global family, Bob comes back on June 12th to talk with the Resource Global family, along with Nancy Orper, Pat Gelsinger, as well as Christine Kane. So, Bob, you're everywhere. And I know you got to get up early to work on your investments for tomorrow.
God bless. It's been a pleasure and a privilege. Best to everybody.
For everyone who is on there, we will be sending a follow-up email with all of our different partners and information on all of our partners that they wanted to share with you as well too. Bob, everyone, Wayne, Paul, everyone, have a good night and thank you for joining from Singapore, Jakarta, Malaysia, US, Austin. Thank you for joining us. Have a good night.
God bless.